Hey traders, Raghee here. Welcome to Charts and Coffee for Friday, October 8th. Great to see everybody. All right, so we have non-farm payroll today. So let's take a quick peek at that 8:30 reaction. There are certain days that when we have these 8:30 economic events, and they're typically going to be non-farm for sure, massive volatility, lots of opinion, sort of the fifth pillar of macro for the FOMC because of the dual mandate that the central bank has for inflation and jobs, which is actually pretty unique amongst central banks. So when we have GDP, PCE, CPI, retail sales, non-farm payroll, some of those more impactful data points that reflect the health of the economy via inflation and growth, health of the consumer via, say, retail sales, and then, of course, the jobs picture and initial claims would be another one. When we have those data events, 8:30 becomes sort of really the first opinion, more volume coming in on, as opposed to days where we don't have those. So if you're a futures trader and you like some of these, what I call a first come, first serve opportunity, pretty darn cool opportunity to play about an hour before the bell. All right, so you can see what's happened. It looks like an earthquake hit the S&P, and you're going to notice that earthquake is visible on the NAS, although in a far more bullish way. It's a 5-minute time frame here. Look at the structure, not just going into non-farm payroll, but in the aftermath of it. And then here's the Dow, not taking it as well. Now remember, in terms of Dow behavior, in terms of the three major indices, when you think about NASDAQ, S&P, and Dow is going to be the one that is not as bullish as the other two. All right. So, and another thing that I started to wade into with yesterday's free video that everybody can check out right here at the Simpler Trading YouTube channel is we're entering an environment where we can start looking at really a mixed book of trades. What do I mean by that? I mean that we'll probably start seeing opportunities unlike the last few years, certainly unlike earlier this year, and definitely not like 2020, that rather than seeing, different long call or different bullish setups open in our book of trades, we can start having, in some situations, long puts, like I have an XLI, and we could still be long calls, like I have an XLF or natural gas. So we're in a fairly unique market. And the reason for that is because we are in distribution. We're not in an uptrend. We're not in a downtrend, not yet. And we're not in an uptrend, again, not yet. We're in distribution. And this is Charles Dow 101. This is 140-year-old market wisdom, market theory. And so I will just treat this market as a chop. And by the way, we're equipped to do that. We have the tools to do that. Whether that be, you're kicking it old school like I did for many, many moons via a slow stochastic, or whether you're doing it in a more accurate and modernized way via ready, aim, fire. If you've got those tools on your charts, you're wondering, when do I take that lure out of the box and cast that? Now is the time. Now is really an effective time to think about the markets through the language of overbought and oversold. So that's what's been working really, really well. I presume it will continue to do so until we organize into a downtrend. And the fear is, Rog, if I don't sort of jump the gun and I don't start selling into rips, aren't I going to miss the downtrend? So one of the things, and this is definitely going to be a part of the next webinar I have for you all, it's going to be part of the class. Look, I don't know. I love downtrends. I don't know of many people kind of start their career off saying, I love downtrends. We kind of find that out about ourselves as we trade. And so, case in point, you look at 2020, which was a monstrously bullish year. Yeah, sure, on the way up through summer and into that mid-August of 2020, I got long like everybody else. It made sense and it was a good year. But by best month, if I would just single out the best block of 30 days for me, it was March because we had that massive downtrend. So I'm here to say, can you identify the downtrends? Yeah, absolutely. That's why moves in XLI, very shortable. Somebody asked me, I think it was in the futures room yesterday, can we short Roku? Rip short, rip short. Guess what? Right? So look at the environment that it's in. So yes, if we transition to a downtrend, we can adapt, the tools, the JT multi, the grab, that's what they're designed to do. So please don't feel that you need to jump the gun, that all the rips right now are necessarily shorts. Now, I'm talking about daily time frames, right? I'm talking specifically about the end of day or daily time frame where we get one new candle per day. If you're looking at a 60-minute, if you're looking at a 180 or 240-minute chart, 30-minute chart, the market environment there could be very, very different. So I'm not talking about those. I'm talking about overnight sort of position trades, if you will. Okay. We're not trend following anymore, right? We're not in Kansas anymore. So we will adapt, and we can, right? Our tools should constantly reassess the environment and adapt. So I thought that was a really important point to kick off Charts and Coffee with. So let's jump into your questions. All right. So Alex asks, any advice for transitioning from trading index micro futures to minis? Alex, yeah. So, I'm a big Formula One fan, and I'll use that analogy. Use any analogy you'd like. You know that any car driver spends an enormous amount of time in the simulation, right? This could apply to anybody. I'm just thinking about it because they're racing in, I think, the Turkish Grand Prix this weekend. So what are they doing? They're getting ready to, they're memorizing and studying the apex of all those corners. The best way to do it with limited track time is what? You get in the sim. I look at micros as better than demo, right? Demo is great to get to know a platform. Micros are great to start to learn to get to know a market. Your habits for micros have got to be scalable. We talked about scalability in the webinar where I said, look, if I'm trading an option like we were in UNG for about $1 or $2, $1.80, $2, I can buy 2 of those. I can buy 40 of them. The number of contracts that I buy is related to the position size and risk according to my account, because risk is not one size fits all. That's why it's oftentimes so difficult to follow other traders into trades unless you are absolutely clear about the risk, which is why that's such an emphasis for what I do. Got to have risk as the most transparent part of the trade. Well, let's take that and then to your question about micros. If you're trading micros in the way that would scale, where if you were trading 2 micros to 22 micros, which would basically be 2 mini contracts, if that scales from the risk perspective, then the transition's really easy. But if you're not, if you're doing what a lot of traders do with micros, which is you're sort of bending, massaging your risk parameters, all you're doing is unfortunately using an unscalable approach. So remember, I think a lot of traders, and I struggled with this early in my career, when I went from a very small account to my first 6-figure account to my first 7-figure account, I thought when I hit the 6 and 7-figure account, I somehow trade different. Wrong. All I do is scale differently. They're the same trades. They're the same setups, right? I'm trading more, right? So when I used to trade 1 or 2 minis, I usually traded 2 to 4, even when I started, 2 to 4 minis. And now that I'm trading sometimes 12, sometimes more minis, the only difference between when I was trading a couple of minis to now over a dozen sometimes is, and which isn't a lot, by the way. Some people say dozen, that's not a lot. For day trades, the difference is scaling in. That's it. So if you don't have a scalable approach, it won't grow with you. And that's the whole point. We don't want to be trading a small account forever, nor should we if we're doing things right. That small account should grow. A lot of people in the Sector Secrets Mastery realizing, oh, it's time for me to increase my size. I was trading 1 or 2 contracts and now I can trade 2 to 4. It should scale. So I hope that makes sense. Yeah. Battlehawk, UNG. Yeah, so let's take a look at natural gas. And we had that sell off yesterday. I wanted to see if we could make a little bit of a compact candle today. Yeah, I'll probably start waiting back in. We'll take a look at how it responds today, maybe even on Monday. I'm not in a big rush, but yeah, this is one of those rare double green markets that has been exceedingly good to us, right? Is buy the dip dead? No, it's just a little bit more rare, right? It's just a little bit more rare. Am I going to continue to buy the dip? When the environment confirms I can, right? It's just that the dip is just far more difficult to find. And we know that there are dip buys. Tesla's been a dip buy. Netflix is a dip buy, right? It's just not XLY being a dip buy necessarily anymore. The language for XLY is overbought, oversold because of the underlying environment. And that's where that JT multi, and that's where starting with the environment first is definitely gonna make that. It's inevitably gonna be an absolute needle mover for you because everything we do starts with what is the environment that we're trading. So really, really great question on UNG. Love the dip. Want to do something with it soon. Something will be long calls. So I might jump into more natty gas futures to the long side. So good stuff. Do I have a quick checklist of issues I consider before I take a position? Donald, yeah. I mean, when you say issues, I mean, you kind of have a glimpse of it now. What the number one and number two, all right? If you want to look at kind of sneak peek at my checklist. And that's the kind of stuff we do in classes. That's the kind of stuff we do in live trading. But classes, it's easy to deep dive. But the first 2 things I will tell you, Donald, whether it's you look at the economic calendar for the proximity to earnings or proximity to a central bank event or some sort of major economic event, right? Whatever hot zone is waiting on the calendar, earnings, central bank, non-farm, whatever major event is waiting. And then the structure. And I think both of those really are first, right? If you want to look at the first thing on the checklist, what kind of environment are we waiting into? And what's the environment of the market? That's always, and that's just not a glimpse of the checklist. Those are the most 2 important boxes to make sure I check in that I've studied what I'm going to have to be dealing with. Environment is really important. What is the underlying structure of the market? Okay, I'll check CFLT, of course. So this is interesting and this is such a great example of, yeah, and I love this question, call one. So here's what's cool. This is what we're dealing with. When I talk about environment, this is what I'm talking about. Okay. What is the structure of the market? What is the environment, structure, environment, market trend, whatever you want to call it? Now, I want to ask myself a couple of the key questions. It could be anything from, where am I in relation to the V-score? Where am I in relation to 200s? Where am I in relation to volume ledges, etc. Right? That's probably going to be the most, that little middle, the intermediate group of questions will probably vary from trader to trader most, but that's what I'll ask. But here's the thing. The most important thing about this is not a downtrend. A lot of folks might think it is. And that's okay. I'm not here to say what's right or wrong. I'm only here to say what I do. We talk about stacked moving averages a lot here at Simpler, right? It's a conversation that's had by almost every moderator here at Simpler. So that should not be a foreign concept, stacked moving averages. So what does that mean and how do we measure it? Stacked moving averages. I want something, ideally, what I'll call fully stacked, green over green or red over red. But then every now and then we'll end up with this yellow, which means that these moving averages they're crossing, they're spaghetti. There's nothing wrong with that. It just means that we're in chop, right? So the way that I measure, again, stacked moving averages and this is really important, 8, 13, 21, 34. That's pretty common. Fibonacci number-based exponential moving averages. But you've got to divide momentum from trend. And that's why there's 2 rows in the JT multi. And we talked a lot about the JT multi in the webinar. So this tells me we're in chop. But take a look. Is it time to get short? Was it a downtrend? No way. This is oversold buy territory. And that's kind of what I'm saying about the markets broadly, the indices right now. So is there anything I can do today? No. That means that where you're looking to get involved is thank you, Darvis. Thank you, previous lows. Thank you, bottom line of the wave. This is where you get involved, right? Not there. So good looking chart, but I think if you're a momentum player, today probably gets your attention. I'm not a momentum player, right? That's not my predominant way of sort of looking at the market. It's that support area in there. It's that volume wedge. It's the low of the range. And knowing that oversold buys are going to work. By the way, if you love ready, aim, fire, that's exhaustion trading. So you're saying, Rag, I'm not sure what this exhaustion trading is that you speak of. It just means we're looking to buy off support or we're looking to short off resistance. Okay. I hope that helps. Where are we getting long on the ES? Well, for me today, getting long is going to be an intraday thing because getting long on the daily, again, differentiating between daily time frame trading and intraday trading. You know, the daily was really an area in here. We're at that 50%, which is going to be a near-term resistance right now. Cut every range in half. I've done plenty of free videos over at the Simple Trading YouTube channel about how to trade chop. You know, it's kind of trading chop is sort of a lost art because over the years, the market's just taken on an increasingly binary view. If we're not in an uptrend, we're in a downtrend. That's categorically wrong, right? There is a brief period of time that would precede a downtrend. There is a brief period of time that might precede the continuation of the uptrend where we're just in chop. It's distribution. And if it narrows to a specific historical volatility range, it could be accumulation. And, you know, the greats talk about this. Wyckoff talks about this. Dow talks about this. This is century plus old. I don't even call it theory anymore. It's just flat out wisdom. There are 4 market trends. It's just the 2 in the middle. The sideways variety tend to be ignored. And it's unfortunate because it's going to hurt traders who presume a broken uptrend is immediately a downtrend, especially when it happens in October. So I'm not saying we're making new highs, and I'm not saying we may not head back down to this area again, but what I'm saying is we're in chop. And the language of chop is overbought, oversold. So I can't buy on the daily today, but I'm sure open to some day trades. I'm sure open to some day trades, although today is a caution day because of non-farm payroll. But if I have any long entries, and we had some longs this week in the euro, excellent longs this week that we day traded in the euro, S&P, the S&P. It's going to be a 5-minute, 2-minute conversation, not a daily. And the more that you can separate your short duration trading from your long duration trading, the happier you'll be. The more they mesh, it just turns into a mess. So it will definitely be a short-term intraday type approach. All right. Will a non-farm payroll have any effect on the Russell? You know, the Russell is such an interesting thing, Andres. Number one, this is such a great example of all broken uptrends do not just become downtrends. The Russell is such a great example of gorgeous uptrend through 2020 into 2021 and to Q1, broke the uptrend. Do we go into a downtrend? Nope. We've been in distribution. And a lot of folks ask, Rob, do you trade chop? Yep. You ready? Darvis. In this case, 200 also. Darvis plus V-score plus the range. Yeah, this has been actually 3 great fades since basically August, end of July on the Russell. Choppy market trading is doable once we've settled into a chop. So why is the S&P and the NAS somewhat perplexing right now? We haven't settled into that chop yet. We haven't established, maybe we have established the bottom and then we retest it and then we can go forward from there. So I'm pretty stoked for what's to come if we end up chopping for the remainder of the year, because we can handle this 100%. All right, so SLV. And again, if you're not aware of the way that I was trading Russell, that's going to be a part of the conversation on this coming Wednesday. So you're thinking, Rog, you're the dip buyer. How do we play chop? If you check out the free videos, and if you've been following Charts and Coffee in the free videos, you know that we were fading the Russell. So I'll get into some more choppy market trading. It's just that in a trend, and when the majority of the market is trending higher, I'm not going to, switch into choppy market mode. And when the market's in choppy market mode, I'm going to switch out of buy the dip mode. We're not quite broadly in sell the rip mode yet either. And this is where that churn, both in the market and in our stomach, sometimes starts to occur, because we're jumping the gun. We're trying to big short the markets, where eventually the market, the downtrend will develop. I've showed you XLI, right? If someone asked about SLV, great example of another market where short the rip is fantastic. So Seamus, what a perfect question for this whole, am I going to miss the downtrend? Not if you're watching the stacked moving averages via the JT multi, because we're separating momentum from trend. We're using the red grab candles. We're using propulsion. And most conservatively, right, by the time we crossed about 23 and change, rip short, and we're setting up for maybe another rip short here, right? So shorting the rip works, but you've got to do it in the right underlying market trend, right? Otherwise, we're just trying to beat the market into submission with what we want to do, not what we should do. And believe me, the tools will tell us it's time to short. And when it happens, I'll tell you what, I will be the flag bearer of short selling, because again, 2021, my best month by a landslide was March. So do I hope we go into a downtrend? More than anything, I would love that, because a trader in me says, Rob, that's your jam. That's your power band. So we can catch it. We can. It's just we have to wait for the market to validate that approach. So I hope that makes sense. All right. So I should end it here. Head on over to your respective rooms as we kick off our morning in either the simpler options gold room or the simpler futures gold room. And I will see you all in Charts and Coffee on Monday. I'll be in the futures room for the close today. So I'll see you for the last hour of the day. We kind of do an Ask Me Anything on Fridays. Let's just kind of run through the questions for the week and prepare for next week. And then we also have our webinar next Wednesday. And if you haven't checked out the class that's coming up, let me remind everybody, we're going to be trading through November together. So if you end up doing the live trading with me at the elite level, we'll be trading through November together. So a lot of these things that you're wondering, Rog, if it turns into a downtrend, what's that going to look like? How can we short it? If it continues in chop, you're going to get the trades either way. So I'm super stoked about sort of the, who knew, right? Who knew the melee we were going to end up with? But I'm pretty stoked, because it's going to make the class and live trading a whole lot more, I think, helpful and definitely fun. All right. Have a great one. Be good to each other. I'll see you on Monday.